The way Bitcoin's share price will now grow infinitely. Come with me to the computer. Bitcoin is trading at 109,000, yet to break into this red zone or the overbought region. As many of you know, there's something called the Bitcoin halving cycle. This happens every 4 years and recently occurred back in April of 2024. Now, what the normal diagram originally looked like was a reduction in the new Bitcoin supply that put stress on miners and eventually got weak miners out of the market. The past two major corrections or winter that Bitcoin had, or bear markets that Bitcoin had, were a drop of 84% and a drop of 77%. Over $140 billion have flowed into Bitcoin ETFs this year, which is where a new dynamic comes into play. You see, there have ultimately been 3 cycles aside from the halving, which was retail early adoption into Bitcoin, the Wild West boom and bust cycle, and now the cycle we are currently in, institutional maturity and stability. Now you can see the difference in consolidation for Bitcoin compared to the previous 2 cycles. Now these ETFs also dampen volatility. So we have recently a halving that occurred in Bitcoin right here in April of 2024. So far, no major pullback, and is that even going to happen? Now when the supply is cut, these ETFs end up absorbing the rest of the supply, causing an increase in demand as well as scarcity. And you also have to note that retail or Bitcoin holders in general don't let go of their coins. Robert Kiyosaki believes that Bitcoin will reach $1 million in the near future. Now, at the beginning of the video, I stated that I'm going to give you kind of a secret that people don't talk about. Yes, ETFs get a lot of inflows. Yes, ETFs now control the market and the narrative, but they also have the opportunity to create unlimited demand for Bitcoin. You see, anytime there is a demand for these ETFs, that's a demand for Bitcoin, but not in the way you think. When investors buy into these ETFs can issue more shares in the ETF without a cap in order to buy more Bitcoin and expand their holdings, which theoretically means unlimited purchases for Bitcoin. As long as demand exists for any of these ETFs can keep creating shares, which forces more Bitcoin purchases. And at some point, these ETFs could theoretically absorb the rest of the supply of Bitcoin. Now, let me give you a too long didn't read of a breakdown of what is actually happening. Halvings still matter, but they're now cut to a tiny fraction of 450 Bitcoin per day, and that will continue to drop. And the 4-year cycle pattern is fading. Past blow-off tops were driven by retail and leverage and not just halvings, and now ETFs came into the game. Spot ETFs sucked in tens of billions of dollars since January of 2024, and each new ETF share equals real Bitcoin locked in custody.